Hey everyone, welcome to the next video of AQ Markets. Before I start, I really want to give a huge thank you to everyone that watched my first video, subscribed to my channel, shared it with their friends, left comments and everything. It really meant a lot to me. The support I've received over the first video alone is just really a lot of motivation to keep me going and to continue this. I'm having a great time doing it so far and I look forward to more videos in the future. So in today's video, we're going to be discussing a very interesting industry. So I grew up under the presidency of George W. Bush, alright, and we entered a series of wars and our gas prices went up to $5 a gallon and plane tickets became thousands of dollars just to fly to Georgia. And it turns out that that was all caused because of the black gold, which is oil, crude oil to be precise. And this is a very important commodity because it powers the world. We have very powerful countries that control the production of it, and at the end of the day, these prices can fluctuate just because of political tension. So let's understand what happened in the oil industry just this year in the last 3 months that caused it to plummet to a 4-year low. Alright, so to get started, let me break it down just very basic level of how the oil prices are typically set. Now, as we know from basic economics, we have supply, which follows a curve like this, and we have demand, which follows a curve like this. They shift, and this equilibrium of their intersection is what creates the price. This handy-dandy chart is going to explain that right here, but ultimately what it comes down to is the price of oil is all driven by production, which is the supply, and this supply and production comes from the oil-producing countries of the United States, and then the demand, which is people like me and you and the big industries that need this oil and gas and all types of derivatives of it in order to make use of it. That includes a hefty player, which is the airline industry, and then also the power industry that provides their lights and electricity. So understanding that, let's get into what exactly happened between the 3 countries that are involved in this situation. And that is Saudi Arabia, Russia, and the United States. So it all began with an OPEC meeting that was scheduled on March 8th. Because of COVID-19, as I mentioned in my previous videos, we saw a huge decline of consumption and a huge decline of demand, which stretched very heavily into the airline industry, and these people consume oil at a pretty high level. So with them being slowed down to almost zero productivity, the demand has decreased, which means that the equilibrium price should be going down as well. Now, in order to combat that, the best way to maintain this sort of price level is to decrease the supply so that the equilibrium shifts the price back up. OPEC said, hey, why don't we go and let's cut production so that we can control these oil prices in this climate of COVID-19. So Russia declined. It went a little something like this. Russia didn't think it was necessary to cut the production. So now, what would you do if your neighbor is not cutting prices? You're going to cut prices and you're going to take his market share. That's if you're a mean person. So what Saudi Arabia did with their state-owned oil company, Aramco, is they increased their production to an all-time high. Now what happens when you increase the supply? Based on our chart here, if we shift the supply curve to the right, our equilibrium price decreases. They flooded the market with super cheap oil and gas, and they were specifically targeting the key customers of Russia. So now, yes, oil does have a kind of like a fixed price, but that depends on the region. Because of transportation costs and feasibility and accessibility, oil prices can vary between different regions. So in the United States, our index is WTI, which is our kind of level of measuring the price of a barrel of oil. And then in England as well, they have Brent crude, which is the United Kingdom's pricing of oil. So as a result of this, they completely plummeted the pricing of the barrel of oil. That correlates all across the world no matter what, because if someone's selling something 60% cheaper, you're gonna figure out a way to bring it to your country, okay? That's a pretty good deal. So that caused the WTI and Brent to completely plummet to 4 or 5 year lows. And here's the huge problem with that. When we are also a oil producing company, we have companies that have a certain operating threshold of where they are profitable. So let's call that the break-even price. So if we have companies such as ExxonMobil, Hess, BP that are pumping out oil, if it's costing them $20 to make a barrel, why would they be selling something for $20 a barrel? That doesn't make sense, and they're not going to be making money. So prior to all of this, oil was around the $50 to $60 range, so it was very profitable to be an E&P company, an exploration and production company. So this caused a huge decline in a lot of our stocks, such as all of the stocks that are found in the XOP ETF, which is the Oil Exploration and Production ETF. So all throughout March, we had crazy low prices for the barrel of oil, which was really hurting the United States. As one of the top producers of oil, specifically our shale companies, they have a higher break-even price, and they were suffering a lot. Now, amidst all of this unemployment and COVID-19 concerns and health concerns, the administration didn't want to have additional layoffs, additional furloughs, and additional firings in the exploration and production sector. So the administration stepped in, actually called up directly Vladimir Putin and Mohammed bin Salman of Saudi Arabia and Russia, and they basically created an agreement to finalize a cut in the production. So as of last weekend, OPEC met again with Russia and Saudi Arabia present, and they agreed to cut production by approximately 9.7 million barrels a day. Our current administration was hoping for more of a target of 20 million a day, but we'll see. So that caused an expectation of the prices to go up. So last week, before the announcement, the price went back up to around $28 a barrel, but then ultimately, as it stands right now, we're stuck back at 22. And that mainly has to do with a lot of the demand for it. So while the demand remained the same, and they also managed to bring back the production, we were expecting the price to kind of go back up to around the mid-20s to low 30s range. But unfortunately, it's still very uncertain how COVID-19 is going to impact all of our industries. And as it stands right now, this is our reality. But I personally believe that when the market does rebound and COVID-19 is a thing of the past, we will see a stabilization of the oil prices. I would guess somewhere north of the $35 range, just based on the fact that at the end of the day, all of these producers, their one main goal is to make money. If you keep undercutting each other, by the end of it, no one makes any money. So there is a neutral price that everyone can agree upon. We just need a lot more stability in this world before we're ready to process that and determine it. Thanks for tuning into the video, and as always, please share with your friends and family. Leave a comment below what you would like me to discuss, or if you have any questions about today's topic, or just any question in general, even my favorite color. I really don't care. But thank you so much. I really appreciate the continued support. I'm looking forward to discussing more and more, and eventually diving into some more specific topics that aren't news related, but could be just finance related, and I'll even dive into a little bit more of the mathematics as this channel matures. Thank you, and I'm looking forward to the next video.